Okay, welcome back. So we've got about an 8-odd point cut as far as the Nifty is concerned. 11,920 is where the index is at this point in time. We'll sort of touch base on some numbers which should be coming in a bit from now. We'll put out some previews, etc. as well. Balasubramanian is CEO at Aditya Birla Sun Life Asset Management Company, and he's joining us here in our studios to take some questions. It's always a pleasure, Bala. It's been a while. Thanks very much for dropping by.
Thank you.
So, I mean, you're at pretty much the epicenter of the shocks which I think the financial market generally felt over the last couple of months. I'm talking about, lending from mutual funds to companies, stress groups and things like that, NBFCs, housing finance companies, and where are we now in terms of that thing? Because one was still hearing that the problem with one or two HFCs is still pretty serious, and if that doesn't get sorted, I mean, we could still see a shock to the system. Are we still at that point, or have things improved?
So I think since the time, since September, I remember the ILFS issue happened. I was in the same studio discussing about how things will shape up. I think since then, the whole financial market have been going through a tough time. And so one after other, something came up. And at that point of time, even the Reserve Bank of India was not providing enough liquidity in the system. And therefore, the problems were of multi-kind. And I think the last 3-4 months, things are coming back to normal. So I would say the economy is sometimes some sense returning, and second is the money which was not getting rotated for most of the players. Now I think the money is back in circulation. The liquidity has improved. Having said that, those who had, of course, had built the book very aggressively in the last 5-6 years, and some of these NBFCs whom I think currently under discussions, whether it is HFCs or even NBFCs, one should remember the fact that last 7-8 years they have been one of the fastest growing in the NBFC space, and they have been growing at about average rate of about 40-45% in building customer base. And luckily, some of these companies have also built large pool of retail assets. Therefore, so far they have been able to actually assign some of the existing loans to banks and take refinance against that and meet all their short-term obligations. And so far, most of the people have met their short-term obligations. And even the companies which got downgraded by 1 or 2 notches, and they were downgraded not because of they not been able to meet their payment obligations, their overall the balance sheets have become relatively weaker than the previous period, and therefore the rating downgrade has happened. And second is most of the companies are putting their best effort to raise either fresh capital, which of course will not come in the form of equity, but it can have, of course, find a strategic partner, which again the effort they are putting in. And now the sales in this kind of market doesn't happen overnight. I think it takes some kind of time. But the fact of the matter is, all the companies are putting the best effort to ensure that they don't first of all default, and second they go and look for refinancing whichever way it's possible, even if it means that they have to give up their company to a strategic partner. I would assume the finding a strategic partner post the election outcome, where we now have a visibility for the next 5 years from the government stability point of view, which I think will bring back the overall economic growth back to normal. And that's been the case. Probably I would assume most of the overseas guys who are sitting on the sideline waiting for the election results to come and then take a call on how much of the investment that they can make on India or how much the incremental money they want to commit on India. But I would assume that we'll probably see some motion coming back on that.
Do you think deal making could be a little faster?
It could now be
behind.
Exactly. I think now that this election outcome is behind, now we have stability for next 5 years, probably even beyond that. Maybe for next 1 decade, if you take, I think probably India could be the story to look for, not just from domestic investors' point of view, even the global guys will start looking at it. And given the fact that globally even interest rates are likely to go down, and therefore ultimately all of them will look at where they can make more money and where the opportunity could come, and which economy can grow faster than the global economy. And that's where I think I would assume that foreign investors will start looking at investing in India. Therefore, I am quite bullish on the FDI investments coming into the country. If that comes, and the time to look at good opportunities in India is actually today, because assets are available at reasonable good price. I think one thing that has happened, and whatever the assumption that all of us had, say before LFS crisis, that assets are good but they are overvalued, and that overvaluation got corrected, especially in the last 6 months in the NBFC space or the HFC space, or even otherwise also in the overall market, valuation got corrected. Therefore, the best time actually look for somebody to look at assets for buying point of view could be the right time.
Okay.
Therefore, whatever the calm that has been returning in the last few weeks or maybe a few months, I would assume maybe if it settled down for the next 1 or 2 months, I think we should be able to come out of this whole issues very sooner than later.
Okay. That's on the NBFC space, but what about the auto space? We just spoke to the management of Maruti where they said that they expect demand to probably pick up 3 to 4 months down the line. What's your sense? Because the overall consensus from economists is that FY20 is also going to be slow when it comes to growth. When do we expect maybe these issues to get ironed out, NBFCs, auto demand in FY20?
See, I think auto demand, I think the point is right. I think it's not just driven only by the NBFCs. They were, of course, have had the high market share, especially meeting the needs of the these kind of borrowers, including home loan borrowers. Naturally, some of these NBFCs now been cutting down their growth, and therefore they are not as aggressive as they used to be in the past. Then naturally, that segment has to be filled by somebody else. I see that shift already beginning to happen from NBFCs to the banks. Some of the large banks who are predominantly focusing on retail segment of the business, I think they do now get the incremental market share. Now, having said that, I think slowdown is actually the function of sentiment. It's also a function of what's the kind of income level that is rising. And one factor that I think all of us keep debating, the savings rate in India has been going down, and then the liability for individual households also is going up. Which again, it comes to the point that how much of the liability that one individuals can create to keep on spending unless his income level also continues to rise, which largely is coming from the rural economy. And especially the last few years, while the government of India did an excellent job in terms of keeping inflation under control, and they didn't actually increase the tinker the MSP prices to boost the income of farmers, because they are left actually most of the commodities actually driven by the market prices. Agricultural output has been pretty good, but at the same time the agriculture did not get as much as they normally used to get in the form of increase in MSP prices. Therefore, the rural income is not growing as fast as what used to happen in the past. So I think combination of all these things, I would assume now that the election result is over, now probably you will see the activities coming back to normal. If the interest rate is being now cut, already we have seen the interest rate is being cut by 50 basis points, and another expectation of 20 basis point rate cut is still remains for the rest of the financial year. And if another 25-50 basis point rate cut comes and there is a further rate reduction, you will probably see the consumer sentiment getting better, and therefore the banks become aggressive and push the sales activities. I think it's a question of 2-3 months. And again, supported by good monsoon, if the outlook on agriculture output gets better, you will see, I think, the things coming back to normal. But at this point of time, the fact of the matter is there is a slowdown which need to get addressed from the pickup point of view.
Bala, the other point is this expectation that flows into mutual funds, equities will start to pick up once again.
Exactly.
Are you seeing that? Have you seen that in May so far? Or do you think redemptions still remain very high?
I think May month, see, one thing that got reversed, I think that big reversal of trend I would assume for MF industry happen. Though the redemption happens, industry still receive net inflows. The month of April, the net inflows was close to about 3,000 odd crores. Even the month of May, I would assume the including arbitrage fund will have about 3,500 crores of net inflows coming to the industry. I'm talking about whole industry. Some industry players would have lost money, some industry players would get money, but net the 3,000 crores of inflows will come. But at the end of the day, again, as I mentioned earlier, the visibility for India as a country, as an economy, is actually improved quite significantly with the election outcome. As more stability, and that essentially means less of noise, negative noises, and less of worry, and more of optimism will come back. I think optimism now that has come back, I would assume the participation in the mutual funds in the form of an SIP, which we have seen a good momentum in the last few years, I think we should see that coming back. And the fact of the matter is still the last 1 year Indian market did not perform as they did in the last 5 years period, 3 year period. And most of the investors have come and put money actually the last 1 year. Their investments would be of course on red or negative, but that may probably hold back some of the investors. But having now seen the experience of the industry, the way we are built structurally, in building up the SIP as a book size, I think we'll probably see that inflows coming back to the mutual funds.
But again, it's a cycle. I mean, you would agree, right? Performance will come when things start to pick up overall, and then when investors see returns, they start to allocate more money.
Exactly.
The phenomenon about SIPs, Bala, I mean, is that it's remained steady around that 8,000 crore figure. Do you sometimes think that it is probably, not for the lack of a better word, more lethargy? Because, I mean, most of these SIPs are, when you sign up a new person for an SIP, it's still, I mean, into perpetuity essentially, right? I mean, rarely do you ever have SIPs being sort of, for a year or 2 years or 3 years.
Correct.
So once they're on. I mean, they stay, the money keeps going into
No,
these
I think
funds.
your observation is right.
Right.
And we do promote SIP. The biggest money is being made in the market only if it is the lazy money. See, if I start looking at my portfolios on a day-to-day basis, if I start measuring how I'm performing vis-a-vis the market, I'll never may be able to make money in the long run. So therefore, the money has to be kept in the schemes and stay invested for long term. Then you get your return, what you are ideally supposed to get. Having said that, an SIP is one asset class. We, of course, all of us are built more for perpetuity. But at the same time, you also have the right to cancel whenever you think whenever thing is not going in your way.
Right.
And this is the first year, I think last 3-4 months, we have seen all of the SIPs getting cancelled. But I must mention actually here for the benefit of the viewers that whoever actually had redeemed stock spends post 2008-2009 crisis, we have seen a big fall in the market, and global markets were going nowhere, and a lot of fear factors were coming and hitting the investor sentiment. And most of the people have built portfolios in 2008-2009 to the bull market period. They couldn't tolerate fall in the prices in 2009. They started redeeming, and believe me, all these guys came back in 2012 and said they started actually the SIP once again back. And the worst thing that the investor should never do in the falling market, should never cancel SIP. In a rising market, if you cancel SIP, it still is okay. You do not know how much more is going to rise, therefore actually you are stopping the NAV, stopping the SIPs. But in the falling market, if you start the SIP, and believe me, you will come back to the same market and start in a high market, in this process you will never make money.
Okay, all right, Bala. We're going to leave it on that note. Interesting conversation, and we'll probably get you back on to discuss it more in details. As of now, we need to take a break with the news that